on the wrong link sometimes. Peter Lane.
Hey, how are you? Sorry.
No worries. How are you?
I'm good, thank you very much. How are you?
I'm just here singing to myself backstage, right?
What song did you sing?
I said, I was singing, McShane said, he's on the wrong link. And I started singing, we're all on the wrong link sometimes.
Oh. Sorry, I was on the link in the meeting invite. So I was sat there thinking.
Yeah, me too. No, that literally happened to both of us.
Oh, never mind. Good to meet you. How are you?
I'm good. Very nice to meet you. You're in where specifically?
I'm just outside of London, I live.
Oh, great.
Yeah. Unbelievably, the sun is actually shining for once. So should be a good weekend.
Oh, it's great. It's great.
And how are you?
I'm in Manhattan, Midtown East.
Nice.
And yeah, it seems to be I didn't actually think about the temperature this morning, so it must have been, and I was just wearing a light suit jacket, so it must be decent outside.
Yeah. Good to hear.
Yeah. Do you make it over to New York ever, or not so much?
So I've not been for a while, actually. With our ETF, we can't sell to Americans. So
okay.
Other than going to I went to the Bitcoin conference in Nashville, which is brilliant. I was at Consensus in Austin. So whenever there's an excuse to get over to America for I think all the best crypto conferences are in America. Because I've been to quite a few around the world, and the best ones are where you're in a town where the downtown area, you could walk anywhere within 15 minutes. And so Absolutely. Austin and Nashville were the best by miles that I've ever been to.
Very cool. I guess I'm wondering if did Mr. McShane say hi to you, or are we waiting for him, or should we just start going?
Should we? Oh, McShane's got no audio. Well, we're good to go.
No audio. Hi, Franco. But we're good to go. Okay. So I'm just going to assume whenever Peter Lane and myself are ready, we're just going to kind of
delve in.
Yeah. So I'll leave it up to you, Peter. Do you want 7 more seconds, or are you ready to go?
Go.
All right. Welcome back to RoxomTV. I'm Tim Kotzman. I'm here with Peter Lane. And Peter, can you tell us a little bit about your background and your current position with Jacobi?
Sure. So yeah, I picked a really good day to start my career in wealth management. I started working in the city the very day Lehman Brothers crashed in 2008. So it was my first job out of university, working in finance in the city, in probably the worst day of a generation. So it was poor timing, but couldn't really have done much about that. And then for the next sort of 15 years or so, I was working in wealth management for high net worth, small companies, advising them what to do. And then I went down the rabbit hole of crypto and Bitcoin, and one of my clients and I co-founded Jacobi, specifically to try and create a regulated access to the underlying performance of Bitcoin for people whose investments are already in traditional investment products. So in the UK, for instance, pensions and an individual savings account, you get tax benefits to save your money in those vehicles, but those vehicles can't buy Bitcoin. So the only way around that is to create an exchange traded fund, which we successfully did after, it took quite a long time to get it through a regulator. The fund's domiciled in Guernsey, which is sort of UK offshore, and then listed in the Netherlands. So it's such a long drawn out process to jump through all the hoops. We finally listed our product probably 2 years after we started the company. And so I'm now CEO of Jacobi. We have Europe's only true Bitcoin ETF. There's a lot of exchange traded notes, and you've probably seen BlackRock launch theirs this week. But we went sort of the more creative route, I'd say, and created a fund structure instead of a note structure, which means there's certain things we can push on and do that the note structures can't, which is in our pipeline of products to try and roll out this year.
Can you dive in a little bit and compare the note versus the fund structure? Does the fund structure hold the underlying Bitcoin?
Yeah. Or that's exactly it. So on a note structure, so let's say you invested in ours, right? You own shares in the fund, and the fund owns the Bitcoin. If there was any sort of issues with us as the promoter, it doesn't affect your shares in the fund, and your fund owns the Bitcoin directly. So we custody with Zodia at the moment. So Zodia custody's got some, some huge backers like Standard Chartered, Northern Trust, SBI Bank. So they are true institutional TradFi players that are building that business. So in our product, you own the shares and the shares own the Bitcoin. There's no collateral needed. There's just a pure play. You own that owns the Bitcoin. So you indirectly, through one layer, own the Bitcoin. With the note structures, it's a collateralized debt structure. And in some instances, depending on the issuer, you'd be worried about the counterparty risk, because if the issuer went insolvent, well, you don't own anything. They owe you money. So if they don't have the money to give you, you may not get your money back. And that's the key difference between a fund and a note structure.
There's been talk over in the US about like T+1, T+2. Are you able to delve into any of those details about how all this kind of works infrastructure wise and how it settles? And I think
Sure.
It would be intriguing to hear as much as you could share on that side.
Yeah, so ours is just like any other ETF. So we're T+1. So we have in Europe, the main market makers and the authorized participants are the same for everyone. We've got flow traders, Jane Street, DRW. So they take care of all the flows coming in, and they obviously then get the deposit of the Bitcoin. They deposit in the fund. The fund then puts it into custody, and then the fund is then settled, and then it's just like any other ETF. Your access is in, your units are then allotted to you. It's in your brokerage account or whatever trading account you use, and then just like I don't know if you had an S&P tracker or anything else, it's exactly the same setup. It's just that it just so happens these ones underlying asset is Bitcoin.
Got it. And when I looked this morning on bitcointreasuries.net, it looks like you guys have about 25 Bitcoin right now. Is that correct? What's the inflows, the outflows? Like, does it kind of, in your mind, track the overall sentiment of the global market, or is it more nuanced?
So the European market is more nuanced, because if you think of the American market, you've got one regulator. They're all on one or two exchanges. You've got 300 million odd people. In Europe, you've got a similar size of people and investors, but maybe 30 regulators, 15 different exchanges. The rules are different from everywhere. So you can't just, you can't do something in the UK and expect it to be exactly the same or treated exactly the same somewhere else. So in the UK, we also have, and on our fund, there's a ban on retail investors buying Bitcoin ETFs or any crypto ETFs. So there's probably a floodgate waiting to happen when the FCA removes that rule. But I think the European market is much more fragmented. It's nowhere near the scale. And I think probably the UK is maybe 5 years behind America. So the adoption in the UK and Europe isn't like it is in America. Accessibility isn't like it is in America. The ease of creating a product and selling it to everybody within that region isn't the same as in America. So it's much more difficult to scale like it is in America. I mean, when you saw the guys list last January in America, it was just incredible to see. It was, it was amazing to be a Bitcoin ETF kind of person. Everyone's skeptical about it, and all the noise about people that don't like Bitcoin. And then when BlackRock, Fidelity, and all the guys listed in America, it was the biggest success in not just ETF history, in any fund launch history. So that was an amazing thing to see. And I wish we had the similar launch, but the European market is very different. And so at the moment, we can't sell to retail. And so predominantly, I would say the people that are buying crypto products in Europe at the minute are retail. So where we've got that ban on us, it's kind of like some handcuffs being on us. So we're hoping for those rules to change. I think once regulators see other regulators around the world successfully implementing it, it's like the SEC letting the American ETFs launch is a great example to any other regulator in the world. Not only was there no problems, it was an unbelievable success. So now you've got other regulators in the world that can go and see that example, and they can then start to say, well, okay, we've had a year of seeing that there's no issues. If we can have some well thought out products that sort of replicate the structure and we have a robust regulatory framework around it, we can then start to be more willing to accept this as an asset class that we would let people invest in. So when we had our fund approved initially, it was in October 2021. And so Bitcoin's come a million miles since then. And one of the concerns at the time was the volatility of Bitcoin and is it suitable for retail investors? So the regulator we are looked after by at the time decided that they didn't think it was. But as the world's moved on, Bitcoin's moved on, there's products all over the world now where retail investors can start to get in. I expect the regulators who are a bit more cautious initially will now start to move forward and create more access for especially the European market. So if you look in Europe, there's, one country might be right next door to another one and they've got different rules. And so it's crazy to have that. And I think the bigger it gets, the more accepted it gets, the easier it will be for European regulators to start accepting it. And it will be much more widely adopted across the European landscape. And, I think that'll feed into the rest of the world. I think there's probably a good, probably a South African market that, somebody should list something there probably. Because the rest of the market, the UAE is obviously flying. Hong Kong have got their ETFs. South Africa have got their ETFs. Canada are really, really pushing on. And now the guys in America have absolutely smashed it last year. So there's not too many places left for it to try and penetrate. But those more cautious regulators, which I'd say the FCA are probably, top of the tree on, in comparison to the size of the market, right? So I wouldn't say there's that many floodgates left to happen. But the UK have been so contained for so long that most flows, if you want Bitcoin in the UK in one of your products that you've already got, you're probably just buying MicroStrategy. And so that's created an awful lot of flows. So the rules really, it's nuts that the regulators are trying to prevent people accessing volatile stuff like Bitcoin, but they're driving them to MicroStrategy, which, what's the difference? So I think...
Well, I'm just laughing because the difference is MicroStrategy is even more volatile than Bitcoin. So it's kind of ironic, right?
Yeah. So I made a really, we were lobbying some politicians not too long ago. And I made the point that my 5-year-old daughter has got a junior SIP and a junior ISA, and she has MicroStrategy, but she's not allowed to buy my Bitcoin ETF, which is regulated by a regulated manager in Guernsey. And the assets are held with an FCA regulated custodian in the UK. So she's not allowed to do that, but she has MicroStrategy. Make that make sense?
Yeah. Well, I'm a big MicroStrategy fan, but
I love it.
We
fully loaded.
Yeah, but also own Bitcoin. Can you, from your view, like, where did all of this originate, or maybe the last jumping off point? Was it 2008 and the great financial crisis? Like, why? You're sitting in London. Where did all of this start, where it's so much more restrictive in the UK, in markets outside of the US? And a little birdie told me that you, Peter Lane, think that you can single-handedly get some of this regulation on the right track within 5 to 6 weeks. So I'm intrigued to hear about that.
Well, I'm not sure I'll put my hat on whether I can get regulation changed within a few weeks, but I'll give it a bloody good go.
Okay.
I think that if you get a regulator to take a forward step, it's much easier to then go to another regulator and say, look, this is what these guys have done. This is how these guys are comfortable. And I think that's an easier way to persuade a regulator who's apprehensive. The ban in the UK came because it was allowed previously. So you could have bought an exchange traded note. So CoinShares had some, 21 Shares probably had some at the time. You could have bought these products in all of your tax efficient savings products, right? And then in 2021, the FCA banned it. But what they don't really seem to distinguish is that Bitcoin and crypto and altcoins are different. And so they're putting it all under the same banner. And so I think the risk with that is that means that the worst of crypto is being likened to the best of crypto. And that's just nuts, because there's like hundreds of thousands of different coins you could buy. But that doesn't mean Bitcoin's going to act like one of them. And so I think what they need to do is really distinguish between, right, so we're happy with these assets. Like I think in Dubai, they've got certain assets that they're happy with. And they would say you could have a fund in Bitcoin, Ethereum, Solana, I don't know what the list is, maybe it's XRP or Avalanche or whatever it is. But that needs to happen. And I think the more and more regulators understand what an actual cryptocurrency does, the more they're able to distinguish one between the other. But the UK having a blanket ban on absolutely everything, it is nuts, really. It's like saying, I know, you look at all the precious metals there are, and there might be one precious metal that they think you shouldn't buy. So they say you can't buy gold. But that's just nuts, because gold is not this precious metal. So what they're doing is they're just putting everything in the same pool, banning everything altogether. And what the FCA recently reported is they're going to try and regulate crypto in its entirety by the end of 2026. And unfortunately, in this big paper they did about it, not once did they mention ETFs. So I don't quite know where the ETF applications sit within that time frame of regulating crypto. But by the time, if they've created a regulatory framework and they're going to regulate Bitcoin, well, I don't know how they even do that. But at that point, if you're regulating Bitcoin, then there's nothing they can possibly say as to say you can't buy an ETF. But I think given the pressure they might start to be under, because the UK, given the size of the market, it really should have a regulator that's, able to understand Bitcoin enough to say this is okay. And they might say that you can't have, I don't know, a Dogecoin ETF. Well, fine, but to put them in the same bucket is nuts. And I think that they need to then firstly understand it a bit more, maybe, and then be able to differentiate and segment. I think Michael Saylor nailed it recently when he categorizes digital assets into 4 different buckets. And if the FCA can then read that, we're like, okay, we accept that, and we'll try and regulate around that. So if you've got a digital commodity, well, that shouldn't be classed the same as the other things. So that needs to happen. And I think if you get a particular regulator over the line, it then means it's easier to then take your story of how you got them over the line to the next one. But trying to get the FCA to move is not an easy job. So it might take me a bit more than 8 weeks, but we'll give it a good go.
Are you kind of saying you need the first regulator over on your side of the pond to go, and then the others will kind of ripple and follow, or would it be?
I think it makes it easier for them to do so, because nobody wants to go first, right? So usually the first regulatory bodies that go first in the world are usually the offshore ones, like Caymans, BVI. Those places are meant to be the sandboxes for innovation and pushing the boundaries. So generally things happen kind of there first, then it flows into the bigger regulators. So for instance, the Canadians were the first to list Bitcoin ETFs. So that made it easier for then, the Guernsey regulator, for instance, when we were approved, to say, okay, well, these guys have done it, so we're not the first. Because as a regulator, what you don't want to be is the first to do something, then it turns out you were wrong. So that's a really bad place for them to be. So the more and more regulators around the world accept it, and the more they develop their appetite for allowing their population into it, the easier it is for the next one to do it. And the more it becomes the norm, how can you then say, no, you can't do this when the rest of the world is normal?
Yeah. Do you think there's a chance, if it takes more than 3, 4, 5 months, and the US kind of sets up this stable coin and market structure bills and what you described as what Saylor has presented, that kind of digital assets framework, if the US would kind of say, okay, this is all law here now, would that be influential and maybe the tipping point for other countries to fast follow, or how do you think through that?
I think it depends on the country, and I think it's generally all political. So if you look back, there probably wouldn't have been the Bitcoin ETFs in America when there was, unless Grayscale beat the SEC in court. And then what could they couldn't say no because they just lost in court. So that really paved the way for the Bitcoin ETFs. It was a big surprise to everyone when they approved the Ethereum ETFs at that time they did. But that's quite likely because Trump came out as very crypto friendly. So the Biden administration needed to do something to look crypto friendly to get the vote, right? So that was all political. And now you've got a political infrastructure in there that's really crypto friendly. I think if there's certain countries that don't have a political issue they're trying to achieve, then they may well follow suit. If you've got other countries whereby it's not really a voting issue, like in the UK, crypto is not a voting issue. So when Labour or Conservatives or whoever were campaigning last year when they were in the lead up to the election, crypto wouldn't have made a difference whatsoever if they'd have been pro or negative towards crypto. It wouldn't have changed the voting. Whereas in America, it was a voting issue. So I think if you have countries where crypto is widely adopted and it becomes a voting issue topic, then that forces the politicians to move forwards. But if you've got an issue, in the UK, like I say, the Labour government, I don't really think that, they're not bothered about crypto that much because it's not going to win them or lose them any votes. So every political party will do as much as they can to win more votes and try and make the people that are going to put them in power do so. And if you've got a topic which not really in the UK. I say I reckon we're 5 years behind America, and we're way less adventurous with innovation in technology. If you look at all the big tech companies in the world, all the big mining companies, they're all in America, right? So I think that naturally makes that country more willing to adopt and accept it. And I think culturally, if you look at, I think it's a fascinating thing to look at cultures of countries and why they're like they are. And I think if you think of the American culture, is that most people, a few generations back, their ancestors didn't live there. They traveled from all parts of the world to go and live and settle in America, which is a very bold move within itself. People moving out of their comfort zone to a whole new country without any sort of realization of where we're going to get to with this is a bold move. And I think culturally that feeds down into the next generation, the next generation, the next generation, which is probably why America is so not aggressive, but in a good way. You know what I mean? Like adventurous. They are going to push boundaries in all sorts of areas, and that's why they've got so many world leaders in so many fields, because culturally it's the norm to do that. If you look at the British culture, like we used to pretty much run half the world hundreds of years ago. So I think there's an easy way for it to become complacent. So in the UK, a lot of people might culturally be complacent because when you look at, the British Empire, you didn't really need to do much in the UK to be in a good position because the UK was in such a good position. So nobody really had to scrap or fight to get their country to a better place. And I think that's culturally seeped into quite a lot of Europeans and Americans, and that's why there's the cultural differences. And that, I believe, is why adoption in certain things takes place, because culturally it's the norm to push boundaries. And in the UK, I don't think it's culturally the norm to try and push boundaries.
I have been thinking, and this is the first time I've ever asked this question. I am like Bitcoin only, right? A non-toxic maximalist, however you want to put it.
Yeah.
But I think, I don't know how much money Bitcoin companies gave politically to the administration the incoming administration we have here in the US. But the reality is that the broader crypto industry gave like $250 million in political donations. So, I mean, in this kind of odd way, is it almost this dysfunctional but good relationship to have Bitcoin and the rest of crypto kind of lumped together, at least during certain periods of time, because that kind of is what maybe made the difference to shift all of this. How do you think about that?
Yeah, I think you're probably right. And I think that it was a wise move for any political party to not say we only like one thing, right? Because if you say we only like Bitcoin, well, there's a whole world of people. What's Bitcoin, like 60% of all of crypto? So there's 40% of an entire community that you're saying no to, which is crazy if you're going to try and get them all to vote for you. So I think it was probably a fairly wise move. Well, you'll see what they really feel about all the cryptocurrencies as they move forward into the Bitcoin reserve is a Bitcoin reserve. They can add to that. They can't add to the other stuff. So that shows you what they really probably feel. People, if you put your money where your mouth is, that shows what you truly think. That's why Polymarket's great, right? Because you think to it, well, go on then, put your money on it. And so if you don't, then you can't really compel me to believe that you believe that. But I think if the administration was open to all crypto development full stop, that's good for America, firstly, because you'll attract the world's greatest talent in, digital assets. And it obviously got them, whatever amount you said they got. But it also is, as a Bitcoiner, it's good for America to own Bitcoin, and it's great for them to have made this move. So whether it was the other coiners paying the donations to get them in or not, I think if Bitcoin rises, typically everything else will rise with it. And so even if it wasn't the Bitcoiners paying and it was the other guys paying, well, their stock's going to end up rising anyway by virtue of the Bitcoin dragging the entire asset class up, I would imagine.
Yeah, that makes sense.
But smart move for them to not single anything out, because if you single it out, then you say to half the market, well, we're not interested in you.
Yeah, absolutely.
Especially in the voting issue, not just the donations, it's the voting issues, right? So some people would have voted, some people might have, they might have hated the Trump administration, but voted because of crypto. And so if you eliminated them, well, they'd have gone and voted for Democrats.
Yeah. What do you see on the horizon, or maybe it's the sun's not quite coming up yet on, and as far as other products here in the US, we have like a Bitcoin standard ETF where every company that has more than 1,000 Bitcoin is in the ETF with a weighting up to 20%, et cetera, et cetera. You have a convertible debt, convertible bond ETF. So like things are kind of starting to cook over here. What are your thoughts for other markets?
You know what? I would love to start building crypto plus traditional equities. Maybe you create an org, because I think many people think Bitcoin fits in a different place in a portfolio. I think naturally it probably sits in the traditional commodities or alternatives bucket. So I think what would be really, really interesting is to start creating a portfolio of stocks or commodities, but you add in Bitcoin or Ethereum or Solana or whatever you think, just as if it's another normal asset. Because I think it will just become normal eventually. And I think you won't, in 10 years' time, you won't even think about, well, how much is the Bitcoin allocation in my multi-asset portfolio? You'll just assume it's there, and it's going to be. And I think those products quite excite me. Like, I'd love to create like a Mag 7 plus like Bitcoin, or those really exciting ETFs whereby no one else is doing it at the moment. Or you create like an active ETF where you can say, well, we're going to have S&P, you're going to have some of the FTSE 100, or you can then start picking and choosing an ETF that's really quite creative that nobody else has, because nobody else does crypto within their normal portfolios. So I really love the idea of creating traditional exciting stuff plus crypto in the same bucket. And I think that makes people's life a bit easier, and they don't have to think about what sort of allocation they should be putting towards Bitcoin or crypto. And I think probably for us, that means you get a bigger allocation of somebody's entire portfolio because you're not just the crypto element to it. And I love to explore that avenue further, probably, towards the end of this year or next year, I think.
Yeah. Any thoughts on global macro, just everything that's happening? Over here, it's like tariffs. They're on, they're off, they're 25%, everything. Like I've heard personal stories of like people.
Cars went in today, didn't they?
Yeah. I mean, literally, I was in Fort Lauderdale, Florida yesterday, and one of my old business partners was driving me back to the airport to come back to New York, and he's like, yeah, my one family member just lost their job because of the tariffs with Mexico. Really? I mean, this is and obviously the markets don't like it.
No, not one bit.
But is it noise? Is it I don't know that it's signal, but it is kind of the reality right now.
Yeah, I've got a couple of ideas on this, and I think, is Trump trying to crash the economy a bit to get rates down to refinance at a lower rate and save the country billions? And, is that happening? I've seen quite a lot of talk around that. I think Trump coming in wanted to, be able to say, look what we did within this period of time. And I think you can't do that without making some real changes. And I think every other country he's going to try and create a reciprocal tariff with their leader would have to try and push back. Whether they think they're going to win that argument or not is a different thing, but they can't be seen to not try and stand up for their country. So what I've been telling, a lot of people that talk to me about their wealth is that I think it's a big argument that was always going to happen. And I think eventually they'll all settle their arguments and the world will go back to normal. And I think then the markets will probably then take off. Whether that's 2 months or 3 months, I don't know. It depends on how far people want to push the negotiations. But I think Trump will ultimately not want this dip to go on for a very, very long time because it doesn't look great. Most presidents come in and it goes great right away, right? So what he wouldn't want to do is for this to prolong a downturn because it's not good optics. And I think if there's one thing he likes is to say, look what we did. So I think this is short-term pain, and I think there'll be long-term gain on the back of it. I still believe, don't quote me on this, but maybe I shouldn't say on an interview. I think Bitcoin will probably still end the year about 200. I don't know if it's going to be a real bad period, or we just sit here for a while and then it shoots up, or is it going to pop up a bit, sit around 95 for a bit, and then, you know, go again and then go again. Like it has its sort of phases. But, you know, I'm fairly confident that I'm not selling mine just yet. So I'm pretty sure within the year, I don't know, it's not financial advice, but I reckon at least double of where we are now.
Yeah. How do you think through the game theory? I mean, the US.
Really interesting. I love this.
Yeah. They signed the strategic reserve. Yeah, I mean, it's just like, but are the other, like, so a lot of influential Bitcoiners are saying, oh, other nations are already mining Bitcoin and buying Bitcoin, but they're not really announcing it. And it's like, well, like, is that the gun that goes off when the US says, actually, we are buying Bitcoin, and then it's just like there's actual buying pressure, and then that's like up only, and we're kind of off to the races? Or
yeah, well, I think so. And I think there's a few things going on, and I think there's an awful lot of stealthiness going on, because if you're a country, you're buying vast amounts. So you do not want to be buying it at the top. I think is a smart move by the American administration to create the Bitcoin strategic reserve with the existing Bitcoin they've got, but they can add to it in budget neutral ways, because that maybe keeps it quite quiet about how much they're buying and when they're buying it, because they don't have to then say, right, we're going to be buying, like the Loomis bill says, we're going to buy this amount over this period of time. And that's quantifiable. You can see that, you'd know they've done it. But I think if you've got Scott Bessent and Howard Lutnick saving money elsewhere to then seek it into Bitcoin, I think that's a really smart move, as so to not make the market think you're buying it, it's going to shoot up. I've spoken to a friend of mine in another country, and he knows that his country are using wasted nuclear power to mine their own Bitcoin. So they're clearly doing that. I was talking to a mining company recently, and they're saying countries are buying Bitcoin straight from the miners at a premium, because they're concerned about ever holding Bitcoin that's ever touched a blacklisted wallet. Whether that blacklisted wallet is blacklisted now or in the future, they can't afford to then be holding Bitcoin that's been in a blacklisted wallet. So that's why I think that the hash rate is really quite high, but the price hasn't shot up, because it's not going, you know, it's private sales. So I think the sovereign wealth funds and the countries that are buying are probably getting it straight from a miner, and they're paying a premium to keep it out of the eyes of the market, and they're making sure that whatever they're buying is going to be the cleanest Bitcoin they could possibly find. In this country, it's crazy. So we waste an awful lot of wind power. If you look on Twitter, there's a website that tracks how much we waste in wind power. And we're trying to get the UK to just plug that into some Bitcoin mining. And even if they, you know, even if you hate Bitcoin, we'll just sell it and take the money. Why would you pay to waste electricity when you could just buy it? I was talking to a friend of mine, James Van Stratton, who was raving about how kind you are. And he bumped into Ed Miliband recently. Ed Miliband's our energy secretary. And James said to him, why don't you just use the excess energy and mine Bitcoin? And Ed Miliband just sort of said that Bitcoin's useless. Clearly doesn't understand it. But even if you do think it's useless, just sell it. And then instead of paying to waste energy, you're making money. And so I think countries are starting to realize that they can do that, because obviously the energy companies know they can do that. All the oil companies, you know, they're flaring off the methane and buying Bitcoin, or mining Bitcoin and then selling it. If they don't believe it, sell it, fine. But I think countries are finding innovative ways to either buy it stealthily or mine it with their own excess energy. And I don't think any country would be crazy enough to put their hand up and say, yes, we're going to buy this much tomorrow, because, you know, they're going to buy it at a crap price. And nobody wants to do that.
That's so interesting, because you hear, or at least I hear so much about Bitcoin and it is ultimate scarcity.
Yeah.
There's only so many of them. But when you explain that to someone that's just kind of coming up the learning curve, they're like, okay, well, if it's so scarce, why isn't the price like ripping, right? If all this stuff is happening, like, this is ridiculous. And that's kind of some of the sentiment on social media right now. Is there, in your view, going to be a point at which, like, the miners, right, every 4 years, they're mining less and less Bitcoin? Is there a certain point where it's like people can only trade off the market, so to speak? to a certain point, and then it's like, well, then like the short squeeze, or however you want to say it, kind of happens?
I think so, because there's only so far it can go, because there's obviously an awful lot more being bought than mined. And once the excess Bitcoin that people are willing to sell is sold, then where do we go? And it's like you were saying, it's the ultimate supply and demand example. When people don't understand it, I was talking to a car guy the other day, and I said, what's your favorite classic car? And I can't remember what it was, but I said, imagine none of them will ever be made again, and people are only ever going to want it more and more and more. What do you think is going to happen to the price of your classic car that you love? And he said, well, obviously it's going to go up. And so that is, it's the most perfect supply and demand example ever. If there's demand, it has to go up. If there's no demand, well, it'll go down, because the supply we know. And I think the exchanges are going to, if you look at the level of Bitcoin on exchanges, I think it's, hitting an all-time low all the time. So once that's gone, something's going to have to give, and it can only be the price, right?
Yeah.
So I don't know when that happens, and I think there's probably enough people that have been in Bitcoin long enough to probably try and manipulate the market to their own advantage. I don't know how much of that actually happens, but it's a consideration. And obviously, if you've got a lot of Bitcoin and you want to acquire more Bitcoin, well, the easiest way to do that is try and sink the market, scare the investors that are new into it out of it, take their Bitcoin for cheap, because I think when there was that crash recently, I saw a stat that the only people, I think it was the 26th of February, and there was a Glassnode analysis on what wallet ages. So demand will take over.
Yeah. I mean, do you think there'll ever come a day when it's so illiquid that, and not like 100 years from now, but maybe 5, 10, 20 years from now, when there's so much illiquid Bitcoin because the governments are holding it, the corporates are holding it, these institutions are holding it, that there's only like 1 million liquid, so to speak, Bitcoin that's actually available? I mean,
I think that's a genuine concern. I think there'll always be, given it's a 24/7 market, that if there's any sign of bad macro environments, it's the first thing that gets sold. Because if let's say Trump tweets something on a Sunday night, you're not going to disinvest your portfolio of other assets. The only thing you can get rid of is your crypto. So I think there'll always be a market whereby there'll always be sellers in volatile times, because it's the easiest and quickest thing you can sell. But it is a genuine concern that it could just almost run out.
I apologize if that was my internet. That was not great. So, but we're back.
We're back. I don't know where I got to. You froze and I carried on talking.
I think if there's only 1 million liquid Bitcoin at some point, because the corporates and the governments, the institutions, the individuals, every cohort is just using it as pristine collateral. That also, what does that world look like? And does that really get the laggards maybe to really kind of perk up their ears and go, oh, wait, what's going on?
Yeah, I genuinely think that is a concern. I think there's a few things that could help it. And I think one of the things that crypto is volatile because it's 24/7. So let's say, for instance, there's some macro event on a Friday night. The only thing you can sell is your crypto. So I think there will always be that element of liquidity, because there'll always be people looking to sell because something's going on in the world. And crypto is the first to go because it's 24/7. But I genuinely think that the more that Bitcoin weaves its way into the standard financialization of the world, and you can borrow against it, you could stake it, create income from it, you don't need to sell it. So it's just going to sit there. And I think that is quite probably, one of the main reasons, as you raise, that's going to cause a liquidity issue going forward. Because if you don't need to sell it to solve another problem, then why would you?
Yeah, that makes sense. This has been so much fun. I really appreciate you giving your time and sharing. And where can people find you and Jacobi online, and maybe just throw it over to you for that and any closing thoughts?
Yep. So we are at jacobiam.com. Anything on there you can find, send me an email or LinkedIn, or I'm on Twitter. I enjoy getting on there because the education you get on there is amazing, and you get some crap, but some of the things you find out on there, because there's such a community of people that are putting out good stuff, is amazing. So I'm trying to get on there more. I'm not very good at social media. I'm kind of, I went through, when you were younger, you had MySpace and Facebook, and I kind of just hated it. Everyone was on there like, oh, look at me, look at me. I'm like, oh, no. So I kind of tried to get back into Twitter because the Bitcoin community is so good. But yeah, so we're on there. So Jacobi Asset Management, we're listed on Euronext Amsterdam. So if you ever want to go to Amsterdam, another orange place, everyone loves that there. That's great. But yeah, online, we're at plenty of events. I've had the pleasure of speaking at some events around the world, actually. And I've, thanks to McShane, I've spoken at a couple of the Bitcoin events, and that's been an absolutely wonderful pleasure to be involved in the community and talk to people. But, we're around. Any crypto event in London, we're probably there, or online.
Awesome. And if anyone is looking to get their Bitcoin conference ticket in Vegas, they can use code ROXOM, ROXOM, for 10% off. So I just learned that today. Figured I'd share that as well. So Peter Lane, thank you so much.
Thank you very much, Tim. Great to meet you. Have a lovely day.
You too.
Take care.